Good morning, everybody. It's Christian from Serene Education with the full majors and notice update for the 24th of February 2012. Friday, last day of the week. Just going to quick look at the markets to see what they've been doing this week. Clearly here on the weekly charts, you can see after a lot of indecision here, the prior 2 weeks spinning tops, it seems like we're going to have our decision day. Looking for a decision candle, pretty much risk averse trading this. People are favoring less risk with euro than US dollar, and we're seeing price moving higher on that. If it continues this way, then obviously this candle over here is definitely giving us a clear signal that we should be looking for further highs. And if that's the case, then you take the low here to the high of this candle here, the indecision candle, back down to the next candle low, and then you see your fib extensions. Okay, we want to see 100% of this initial move here. If this is genuinely, so 100% will take us here just below the one, just above the 136.50 mark, if that's the case for this pair. So as it stands now, if you look at the low swing lows, it's pretty much in favor where the 100% is. Okay, lower swing trend line direction. You can see quite clearly that in this area here is potentially where price is likely to go to if we see price moving. 61%. 61.8% fib extension is at the next prior support and resistance level, quite a strong one through here, which is at 13400, and we're approaching that quite quickly. So on the daily 13400, put that in, it's quite a significant, and you can see prices trading at that as we speak. So are we going to see consolidation now because of that? Remains to be seen. But as you can quite clearly see from here, the pullback, if you really want to see where prices are pulling back, you take the high of this candle down to the bottom here, and you can see that 38.2 actually is a nice support. Price bounced higher, and now we're heading into this 50% retracement area of this initial. So same over here, 61.8, and price moved lower here. From here to here is 50%. 61.8 will take us back to the institution moving average, which happened prior. But yeah, clearly see this area here is our long-term weekly very strong support and resistance level. So you can see we can be trading into that range. You look at the highs over here, for example. You take wicks to wicks, or the end of the wicks to wicks. You can quite clearly see there has been hesitation in this area here. Hesitation, breakout, resistance. Same thing again in this area. So we're going into this consolidation area here. Be aware of it, guys. We might see consolidation as we head into this. We've got to break above all this to see if true confirmation high swings on this pair. We are trading risk aversion trading on this one over here. It is moving higher. Technicals tell otherwise, but prices are just moving higher because of that. And you can see a nice little hammer bounce here, and we're moving higher on yesterday's candle. Nice bullish candle to the upside. Just be aware we are going to be consolidative now as we head into this area here of price support and resistance. 4 hours giving us the same story. 61.8, 3400 is in play. 50% fib extension. So we took the low, the all-time low, the bounce higher, and the pull back to the institution moving average, and the bounce higher there. We've gone through the 23.6, found support and moved higher to 38.2. Bit of indecision at 38.2. Going into the squeeze pattern here. Then a bit of bounce, and then a nice upside candle, 50%. The pullback, the breakout, and now we're going up to 61.8. So 61.8 need to be trading above 134.50. to see price moving to 100% of the move. We want to see 100% of this move being complete on our 4 hour, and if we look at that 100% on the bigger time frame, it should take us to roughly around the 135.50 mark, which happens to be price support and resistance at that level, also going back here. So clearly from here, the 16th I think it was, to the up, the slight pause and the continuation. So we want to see a continuation of this. 100% will be here, but we have to get notice with the 61.8. So there's a lot of congestion now, guys, on the daily going into this 13400 mark. So be aware of it. Be very, very aware of it. What's happening on the hourly? Is the hourly showing us any slowdown? Well, we've seen price moving higher during the course of yesterday. However, during the Asian session trading, just trading sideways. Look at that. Look at all these hourly bars. Not a lot of decision. Very indecisive. A lot of spinning tops and dojis in that. Very, very consolidative over the Asian session, and that just coincides potentially with this high here at this very strong resistance level now, at the top end here at 13400. There we go. You can just clearly see it there. So take that in consideration. After, when you see a lot of spinning tops indecision at resistance, there could be potentially a pullback. Okay. So we want to see either one or two things when you see a lot of indecision. We want to see a decision candle. So indecision, we want to see decision, and then we want to see which side of what. If it's at support, then is it a decision as in a bullish at support, confirming as a nice support, or is it decision at resistance with a bearish engulfing at that level, telling us we should be looking for true resistance and a further breakdown to the downside. See how I'm placing together. I'm waiting for the market to give us a true indication. I would like to see a decision. If this is to remain bullish, as we saw yesterday with all this upside movement, if this is to remain bullish, I wanted to clearly break 13400. It's got to show to me the sentiment there is favoring long-term upside. I don't want to be trading into a very strong resistance level. I'd like the market to tell me, yes, I'm happy with upside and I want to go further. And if that's the case, then long-term, if we get a break above 134, we should be looking at our highs up there at 13500, as I mentioned. As our first initial targets on this daily here at 135.50. Okay, because that'll be the second extension of the first extension higher on our daily. Make sense? Okay, so if you go back here to the 4 hour, you can quite clearly see now, very indecisive, spinning top, and the last 4 hour moving slightly higher on this momentum up. Okay, so we want to see price breaking. Ideally, we want to see price moving higher than the 13400. You can trade into the 13400, but it's so close. I mean, yes, you can make 20 pips or so, but you're going to be risking quite a lot. The last thing you want to do is be trading into it only for it to pull back quite sharply and knock you out of the trade. Next up is sterling against US dollar. Let's have a look at the weekly quick. Same here, very hesitant at this area. You can quite clearly see that we had 3 weeks prior. Price not really rallying above 158.50, 158.00. And that pretty much sums it up, because if you look at the daily time frame, we were trading seriously into institution moving average, which happened to be prior resistance in the past. So we could have expected tweezer top here at resistance. Price didn't really materialize, pulled back. We had an indecision counter the day before, the day after this tweezer top here, and price just rallied through this prior support area to the downside, bouncing I think on the 38.2 if I'm not mistaken. Yep. Bouncing, morning star formation and bouncing higher. Next attempt didn't even make the institution moving average here. Clear failure at 5900. And price engulfing the previous 2 days, and we looked for a short back into the 38.2 mark. And we had a nice clear bounce on that yesterday. However, not trading higher than 23.6. Clearly, we need to get above this 23.6 now on our daily to see any potential reattempts of those highs, or the institution moving average in particular. Whether you're trading the wick to wick, that would be your trend on the short-term time frame, or if you take body to body, there's hardly any difference. So, got to get above here to even think about reattempting prior swing lower here at 1585, or the institution back at 5900. So, as it stands now, we are considered bullish consolidative. Price is moving sideways to the upside on this little thing, but overall sentiment of this chart is still low, making lower swings. Okay, so short term, as long as we maintain above 38.2, then there's more likelihood of further bounce. Got to break 38.2 to see any further extensions to the downside. We are consolidating under 23.6 now on our daily. Okay, so a seeding level, if you want to put it intraday, is going to be about 1577. So on our 4 hour, for example, you can put that in, or you can just draw your higher swings or your fib retracement levels. 1577 is 23.6. There we go. You can quite clearly see it there. As we've gone into it, the last couple of hours, very indecisive, followed by bearish engulfing, and you can see price has really pulled back after initial reattempt of those highs. CTC is negative. We are still, however, above the institution moving average. Okay, so this is just a positive pullback. As long as it remains above the institution moving average, then we should be further. We should see more likely attempt of a reattempt of those highs. If we don't, and we get a break below the 38.2, it'll break below the institution moving average on this time frame, and that will remain as a very bearish setup, because now we can clearly see if we fail here at 23.6, now that's going to form a lower swing compared to all these other ones. So lower swing, lower than that one, lower than that one, lower than that one, and lower than that one. So you can see price action really starting to slow down now, at that very strong daily resistance level at the institution moving average at 5900, and price is starting to really look for a major pullback. Break below the institution moving average here at 38.2 should look at 50%. Retracement to 61, ultimately way back down here at the 100%. That's what's happened in the past. If we look back at the daily, for example, you can quite clearly see, here we go. The attempts last year, October, November. We saw reattempt, failed to close, it traded higher, failed to close, pulled back, reattempted those highs, failed again, bearish engulfing. A morning star at a support area, re-failed again, and bearish sentiment creeping in, and then we had price just really letting go. A pullback which failed, and then price reverted to the downside. From those highs here, I think we saw 100% move, yes. From this breakout, pulled back 100% of the initial move here, and then we saw a bounce, and then we just saw it consolidating with a bearish breakout to the downside. So we can see exactly the same thing happening here. You can quite clearly see we had a support area through here for a long period of time. If we take the lows here to the high, 23.6 acted as a very strong support for a very long period of time. And then we had a clear breakout, pullback against those levels. Otherwise, and eventually price just pulled away. We could have the same thing here. Support, break of that support would be the same over here. Okay, and we should see price reverting to the downside again. So just be aware of it. See how it plays out. It's done in the past. There's no reason why I can't do it again now in real time. Okay, for this to be positive, we need to see long-term institutional moving average being breached. Until such time that that's been now as new resistance, we could see price just falling over the next couple of days. US dollar Swiss franc. Let's have a look at the weekly pullback, and then a little support area here at 9100. As I mentioned, I traded that to the bottom here, and then looked for downside. But clearly, over the last couple of days, we've seen price really breaking lower. That reflects on the daily. You can quite clearly see our 9100 being breached. Support, breached yesterday. Nice down candle, really moving lower, and now we're really below a very strong support and resistance level. If we look at fib retracement levels, if you take the low here, all-time low, go to the high, 23.6 is in play. Okay, guys, could see hesitation now as we head into this 23.6. What's going to happen now is we've got to see a break below 900, round figure there again, a break below that, then we've got a lot of free open space down to the downside here, at least to the institution moving average, or the last port of call before we probably potentially see the Swiss government actually intervening, and that would be the 8600 mark. This is where price was capped above last year. You can quite clearly see that euro Swiss franc move cap that we saw in September last year took us above 86, and price which is the equivalent of 120 on the euro Swiss franc. So 86 on US dollar Swiss franc is the 120 mark on that. So at the moment now, we've got to see a clear break of that to see any further extensions lower. Otherwise, we could see consolidation. Everything, excuse me, CTC wise, making lower swings on the daily, looking good. Prior resistance here. So consolidator breakout. We want to see a pullback, and we saw further extensions to the downside. So now 900 in play. Hesitation, get below 900. We could see further extensions to the downside for this pair intraday. There again, 4 hour, definitely seeing more red than blue. Consolidative here, institution moving average still capping this pair as we moved lower. Take the highs to the pullback. Oops, apologies, got this wrong. Pullback's way up here. Back below the 50%, 100% was at 38.2. We're heading lower now, 900 or 61.8 is the over, is that resistance I mentioned on the higher time frame. So be aware of it, guys. Could see a bit of consolidation here today. You can see the hourly time frame break below the institution moving average, moving lower, the 9100 mark. There we go. Price support 3 here, and then failure, and then price is ready to the downside. Nice bearish engulfing yesterday, or bearish candle yesterday, confirming that downside movement. If you took the lower swings, swing low, swing low, swing low, really much in that. We could see another swing low here. Notice there happens to be a support here on the hourly. Look at all this indecision, a lot of indecision, a lot of spinning tops, dojis. We want to see a decision candle. This is closer we get to 91 or 900. That strong support I mentioned. We could see decision coming or creeping in. You've got to see a break of that. Bearish engulfing to the downside would definitely confirm that. As we swung lower, the RSI has definitely moved in the same direction. So the price action has moved in the right sense or the right way. We don't want to see as price moving low, we don't want to see the RSI getting any bullish. At the moment, you can quite clearly see prior breakout here, and you can see we're trading the underside of that. So still moving low, but we've gone into a very indecisive range now, and that decisive range, if you take the breakout or the high to these lows here, you can quite clearly see the 23.6 is in place. So if you're looking for smaller time frame trades, if price still remains below 23.6 on your 5 and 15 minute charts or 30 minute charts, and we've got a bearish engulfing here, then it's just confirming that we should be looking for potentially further extension to the downside. If it breaks above 20.6, then we should be looking for at least a 903 as a potential target, 50 and 905 to the upside. Back up to 905, back into another price support, breakout resistance, and then we're moving back into the institution moving up. So the pullback overall on that time frame, if you're going that far back, this will be a genuine pullback. And then you look at your highs, the breakout to the downside to give you a proper signal. But if we do get a pullback, as long as it maintains below 91.10, then all we're seeing is just a pullback before we see further extension on the daily, which is bound to happen. So any breakout that we see of prior, this is a daily chart now, very strong support, a breakout, we should see a pullback and then a continuation lower. Last pair of the day before call it quits for the weekend is the Euro US dollar. The US dollar Japanese yen, my apologies. And this is the one that's been moving the most. Absolutely amazing movement, because we're going into a third consecutive week of upside movement after this indecision. And that all started way back at the first week of February when we had non-farm payroll, great figures, and we saw that candle just start from there, and it's just been progressing. Breaking 7,800, which happened to be price support and resistance. Really rallying into a prior 80, which happened to be a very strong support and resistance before we saw the breakout. This is a weekly chart, guys. So very long. You can see November. Best parts of last year, going through 2011 and bits of 2010, very strong support at the 80. Breakout of that, then we went into consolidated range down the bottom here. And now we've broken through both of those prior resistance levels. If it maintains itself above 80, then we should see further extensions to the upside. If I move to the daily, you can quite clearly see that run. Really, really massive, moving higher. Very, very dominant. 7,800, as I mentioned, very strong resistance. And then the institution being breached down a very bullish upside candle. Then going into the 80, quite clearly see prices pulled back. Yesterday in particular, a nice bullish move the day before. Thursday's candle moving back, finding support, and then Asian session, European session open. We're just rallying now on this to the upside. So now if we can find a clear support above here, which it looks like it's really doing at the moment, then that just bodes well for long-term sentiment, because now we can actually buy into this setup for further extensions to the upside. Okay, so all we should be looking for is positive or buying sentiment to keep in. This is our 4-hour chart. Quite clearly see price moving above the prior high on our 4-hour to the 80.40. If the candle can close higher, then we should be looking for higher extensions. 4-hour, look at this beautiful trading. That's the reason why I love trading 4 hours on hourlies. You get a lot of nice momentum pullbacks. It's far better suited. I know this is the US dollar Japanese yen, but as momentum's been rallying, you can quite clearly see how the 20 period moving average is acting as a beautiful support for this pair, as it's been maintaining those highs. So as you can quite clearly see, that 80%, that 80 mark, where price pulled back to, and we saw a rally on that. This candle now closed below the 80. However, didn't close. It was too close to the prior resistance to actually think about going short, and it would have kept you out of that. So maintaining those highs above here would definitely see further extensions to the upside for this pair. The hourly chart, you can quite clearly see Asian session open, price just really rallying after we saw price just pulling back yesterday on the session, just moving within the channel, bouncing along. However, not closing lower than the prior resistance level here. You can quite clearly see through the 19th, 21st, and 22nd. We saw a break above. Didn't close lower. Okay. CTC on our hourly did not go red, and we're still above the 50% line on RSI. So there was no shorting here. We should have just looked at it as a consolidated pullback for anybody who's trading US dollar yen long-term long, just as this is selling some of their positions before other people getting back in to get to trade longer. That's it, guys. Hope you have a fantastic trading day. Hope you have had a fantastic week. If you guys have been in these trades, well done. Congratulations. Just make sure if you're going to remain in these trades later on to please pull your stops up so you can you can maximize your returns. Otherwise, look to start scalping out of those positions. We are trading at some resistance on a number of charts. It was resistance and support, so be aware of it. Other than that, have a fantastic trading day, and have a very, very enjoyable weekend with family and friends, and I'll see you first thing on Monday morning. Till then, trade serenely.